when you look at what's going on in the market today and you see what's happening globally, I don't want to be assumptive, but of course, when you're looking at these global macro issues, I'm sure El Salvador you're paying attention to what's going on. I mean, at some point, you probably still have friends and or family there. But when you look around the world and you see Ukraine and Russia and China and India and Europe and UK, I mean, it's a real mess out there. Then we hear in Canada, interest rates are going up, prices are getting out of hand. I'm seeing, and we're both in a similar or the same industry of education and coaching, but I'm seeing a lot of people step to the sidelines and going, I don't even know what to do. So let's kind of position and ask the question of this is that how do you see the market knowing that, like me, you're seeing people freak out, don't know what to do, don't know where to go, don't know how to handle it. How are you painting a picture for investors that you're speaking with in terms of the opportunities that you see? And are you still optimistic about what's going on in the real estate? I'm assuming you are, but I don't know that to be true. Let's kind of unpack that a little bit.
Well, there's a lot of things happening worldwide. And I think all of it is going to create the perfect storm for people. In the next 5 years, you're going to see the biggest wealth transfer in history. For the first time, the little guy has a chance. And it's a result of the last 50 years of misinformation in the education system. We have not focused on financial literacy. We have the biggest segment of the population, which is the baby boomers, that have pretty much impacted every single industry from the second they were born, all exiting this life, exiting portfolios, retiring. And those people have assets and portfolios that they need to hand down, and the next generation doesn't want it. They don't have a need for it. They don't want to manage tenants. They were not financially ready to absorb those portfolios. Even today, I've gotten 3 emails from 3 different large families in Canada where they're looking at liquidating the portfolio. So I see it coming. Now mix in high interest rates and this idea that it's the uncertainty of where we're at, right? I think it really creates a situation where there's going to be massive opportunity, right? Now, the next year, the next 6 months, the next 6 to 12 months are going to be very important for people. You're going to start seeing a lot of people bleed out, and it's unfortunate. Like, really, we don't want to see anybody in trouble. Like, you don't want to see people hurt. I don't want to see it, but it's inevitable. People, made bad decisions, right? They made bad decisions back in 2021, thinking they could do all of these things, and they couldn't. And so there's going to be a lot of opportunity in the next 6 to 12 months. And ultimately, there's still a housing crisis, right? And this is where people don't really realize that, okay, there's still a need for housing. Maybe the interest rates are high now, but we're going to be in a very big trouble in the next 3 to 4 years. So all of these things combined, I would say, make it for the perfect storm. And success is just a matter of positioning yourself in front of a wave, right? That wave is gonna take you. It did for me back in 2009. It did for me even back 2020. 2020, the pandemic was a time of expansion for me. I did great during the pandemic, and so we are in a very similar situation now. You said some people are on the sidelines, and you don't want all these people in the market because that inflates the prices. I mean, people are buying because they're buying, and every time interest rates go up, you lose a segment of the competition, right? There's less people buying, which means more opportunity for us.
Well, I think there's a lot of things that are unfolding. I know something that you were talking about in terms of opportunities showing up, and especially in that multifamily space. I mean, immigrants came to Canada, they bought multifamily units, 40, 50 years later, they're finally going, okay, well, I should get rid of it and or pass it on to my kids. And the kids are going, listen, that was my dad's thing. I don't want anything to do with that crap. I'm not dealing with any of it. Just, show me the money and I'm out. And so that's where a lot of those opportunities, I think, are showing up. And you have to be quite skilled at even finding those opportunity. There is a method to the madness in terms of uncovering those gems, and that just comes from relationship building and asking the right questions, and really getting to know some of the people that are playing in that particular space. uh, i I think that, when you talk about where we see some troubles brewing, certainly more so in, let's say, Toronto-ish and Vancouver, where we're seeing the condo market, people got on this bandwagon called real estate's going crazy. I'm going to get rich. And, when the market's, really hot, everybody's a real estate genius. They don't have any capital gains, but they, haven't experienced capital losses either. So now all of a sudden, the game they were playing is buy and assign, is that, they got caught. It's like the musical chairs, right? The music stopped and there was no chair, and a lot of people are left holding this particular condo commitment that they've got. And is that where you're also seeing some of the opportunities that are going to show up if people are in the condo market? What's your view of it? I know that's one space, for example, that is going to be problematic. I mean, there's going to be other issues that show up as well, just with people in their homes and not being able to afford, given the increase in rates. And as much as the banks are kicking the can down the road and extending amortization, OSFI is also putting pressure on the banks and going, no, 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 we got to tighten up some of this lending. So how do you see, when you talk about some of the perhaps pain that people will experience, that creates opportunities for investors who are good at solving problems, not taking advantage of people, at solving problems? What's your kind of read on where you see it?
Well, definitely, the condos. The condos are those hope buying and pre-construction and hoping that the pricing is gonna go up.
Yep.
Obviously, I don't even consider those people to be investors. They're
Speculate.
speculators, and with whether the money market. I mean, they would have got caught somewhere, right? Because people just operate on emotions.
Yeah.
Where I see a big opportunity is in the office space, right?
Mm.
I don't see people going back like they were before. And I know that if you're a lender in the office space, you're going to want to call your loans back. You're not going to want to refi anything. You're going to just want to keep everybody safe. What's gonna happen? Well, a lot of these like huge office buildings won't be able to refi, won't be able to continue,
Yeah.
and those people are going to be in trouble. I would say probably fall of 2024, and there's going to be a lot of opportunity work to do conversions. So picking up, office buildings on 10 cents on a dollar, and then repurposing those office buildings to maybe short-term rentals, maybe more units, more multifamily or whatnot. So there is going to be opportunity, and maybe some of these office operators have deep pockets that they can do that themselves, but some of them are going to get wiped out of the market. And it's unfortunate, of course, but there is going to be opportunity there. So I see a lot of that happening. For the longest time, the BRRRRs in our industry, everybody. I mean, when I started, 23 plus years ago, they called it a refi, but
Yeah.
now it's like BRRRR, right?
Yeah. Yeah. Yeah.
And which is fun. It's a fun little name, but people are really attracted to that. So they went in with a lot of private money. They went in and bought all of these buildings, hoping to reposition, and
Yeah.
now they get caught with the higher interest rates, and those people are going to be in trouble as well. Homeowners, if you're looking to relocate, leave the country, or you no longer want to own a property, where you might be in a situation where you might not be able to dispose of your property in a timely manner. So those are the things that I see happening in the next 6 to 12 months. For
Mhm.
the multifamily space, I don't really expect for prices to come down. I expect for the creativity to go up, right? There's a lot of great assumable mortgages. I was just looking at one 2 weeks ago, $7 million, 7 years left on the mortgage, 1.74% interest rate amortized over 40 years. And so
Wow.
that's a really great asset, that you can assume, right?
Mhm.
Things like agreement for sales, vendor takebacks. That is where people are going to live. I don't expect for prices to come crashing down. I
Mhm.
just expect for creativity to go up. And if you're in a position where you know what you're doing, you're educated, and you know how to talk to people, build relationships, like you said, be in a position where you can be a problem solver, you're going to be able to tap into one of the greatest opportunities in history.
I couldn't agree more. Of course, we're good friends with Barry Maguire, who does creative buying strategies and has been doing it for many years, 48 years as a real estate lawyer. And, him and I have had these same conversations. And of course, I've known Barry for 20 years. And we see these cycles and we go, this is the time
Yes,
to know how to and understand the dynamic of an agreement for sale, and be able to solve problems for people even in a rent to own situation right now. If you're really on the ball, there's great rent to own opportunities. So, which is all to say, this is, I have a fundamental philosophy, is that there is no bad real estate markets. There's just the wrong strategy and tactic in the wrong part of the real estate cycle. It doesn't matter where you are in Canada. It doesn't really matter too much what's going on in real estate. Just use the right strategy and you will
absolutely.
still be very successful at that, which is, of course, I think, something that you're really saying in all of this is that there's opportunities that are unfolding, as we speak, and they're only going to increase as this whole economic, the current economic conditions start to unfold. And I think we've got some pain going forward, whether it's a hard landing, soft landing. I mean, that's still yet to be determined, to be honest with you. When I look at what's happening economically, I really don't see a hard landing, but so much can go wrong in the period of time, given what's happening on a global scale. One of the things that people are always talking about, Alfonso, and I'd like your opinion of this. I have mine and I'll share it, but what's your thoughts on interest rates? It's so topic, like it's a big topic. Everybody's going, they got to raise them. They're going to go higher. Of course, we just got what I refer to as a sucker punch. The wind knocked out of us because we got punched in the belly by a rate increase and the threat of another to follow up. But when you look at interest rates as an influencer in the real estate cycle, what's your kind of view of where you think interest rates might go over the next year or two or three, whatever your view is?
This is what I know. Every single year in the NHL, they change a rule. They change the rules all the
Yeah.
time.
Mm-hmm.
But professional NHL players show up and play within the new rules, right? And so, as real estate investors, we have to play within the new rules, whatever the new rules are, whether the interest rates are up or down or the 2 years ago, we were complaining that, you can't find deals because you have, 65 offers on one property, right? I mean, there's always going to be something, right? You just have to make the best decision with the information you have,
Yeah.
right? Back in December, we were doing this, $14.5 million deal. The mortgage was $10 million. And what we did, because we go with lenders that go from the bond market, not the overnight rate. And so the bond market had come down, and so we were able to lock in at 4.4%. 4.4%. Well, there was also the opportunity to buy down the rate. So
Mhm.
we put an extra $150,000 to buy down the rate to about 4.2. Okay. And over the lifespan of that mortgage, we would definitely make up that money for sure. And so we did that. We locked it in, we fixed the rate. We were closing December 14th. By the time we closed, the bond market had gone down below 4%. Right. And
Yeah.
so what do? I had to make the best decision with the information that I had. Right.
Sure.
And so I fixed the rate at that time. even though it went slightly lower, but it could have gone the other way. I could have been sitting there with a $10 million mortgage, and now I got to pay 5%. It wouldn't have been feasible. And so this is what I tell people: make sure you stress test your own deals. You can think about, ask yourself, what is the worst case scenario here, right? What is the worst case scenario here? Well, the interest rates go up to 15% in the short term. Okay, good. Okay, they're at 15%. And you locked it in how much? Well, 7%. Okay. Can you survive with this 7% for the next 5 years? Yeah. Okay. So if you can deal with the worst case scenario and you're okay with it, then that's what's going to dictate your decisions, right? But sometimes people get into investments wishing and hoping things are going to happen, right? They're smoking the hopium. And so, they're like, okay, don't worry, interest rates are going to come down. I'm sure they're going to come down. So I'm going to do a 2-year term or whatnot.
Yeah.
But what if they don't? What if they don't? Are you going to be okay? Is your family going to be okay? Are you guys going to be eating sardines every day, or you got to eat mac and cheese for the rest for 6 months to make sure that you stay above water? And so you have to ask yourself every single time, whether everything is high, whether we're in an expanding market or declining market, am I willing to deal with the worst case scenario? And if the answer is yes, then that should go into your decision making.
I think you make such great points in all of that, which is, sophisticated investors understand one fundamental. What's my plan A? What's my plan B? And even if I can, I want to put a plan C in behind it, because that's really, although it feels like you're playing defense and being very conservative, that is the smart way to go. When you think about going back to one of our earlier conversation a moment ago, which is those individuals who are speculating, the only exit strategy that they were counting on was to assign that deal. The music stops. All of a sudden, nobody's interested in an assignment, and or at least at that price. And the next thing you know, they're taking a loss. And that's because there was no plan B, no plan C. It was their only option when they bought the property. And to your point, we all refer that as, gambling and or speculating. Doesn't matter how you look at it. It's not the smart move to make.